joining us virtually as well. We welcome you all to the press meet on the announcement of the company's IPO. Before we begin, I would like to introduce the management and other distinguished guests who would be addressing today's gathering. From the company, we have with us Mr. Saurabh Agrawal, Chairman, Tata Capital Ltd, Mr. Rajiv Sabharwal, MD and CEO, Tata Capital Ltd, Mr. Rakesh Bhatia, CFO, Tata Capital Ltd, and Mr. Sarosh Amaria, MD, Tata Capital Housing Finance Limited. And representing the bankers we have, Mr. V. Jayashankar, MD and member of the board at Kotak Mahindra Capital Company Limited, Mr. Rahul Saraf, MD and head of India Investment Banking at Citigroup Global Markets India Private Limited. Post the presentations, we'll welcome questions. For those present here, we'll pass around the mic. And for those joining us virtually, a humble request to kindly type your respective questions in the Q&A panel available to you. Those questions will be read out to the management post the presentation. A gentle reminder to kindly identify your name and media house before asking the questions, please. And a small request to kindly place all mobile phones on silent before we proceed. I would now like to invite Mr. V. Jayashankar from Kotak Mahindra Capital Company Limited to initiate the proceedings. Over to you, sir.
Good afternoon, everyone. On behalf of the board, the management of Tata Capital, as also the book running lead managers to the IPO, I take great pleasure in extending a very warm welcome to each one of you on the occasion of the launch of this IPO. It is truly a landmark moment for our IPO markets and a proud chapter in the Tata Group's storied legacy. We at Kotak are proud to be the left lead book running lead manager for this IPO. At the outset, I would like to summarize the key IPO highlights. Tata Capital IPO is the largest ever IPO from the Tata Group. It is also the largest ever NBFC IPO and the fourth largest IPO in the history of Indian capital markets. Tata Capital IPO is the second public offering from the Tata Group in nearly 2 decades, following Tata Technologies' 3,043 crore IPO in November 2023. Tata Capital is the flagship financial services company of the Tata Group, built on a foundation of over 150 years of legacy. It benefits from Tata Group's unmatched reputation for governance, trust, long-term value creation, and deep-rooted commitment to India's economic development. Let me touch upon the key business and investment highlights. Tata Capital is the third largest diversified NBFC in India with total gross loans of rupees 2.3 trillion as of June 25, offering the most comprehensive suite of 25 plus lending products. It has a highly granular loan portfolio focused on retail and SME that constitutes 88% of the book. It is one of the fastest growing diversified NBFC. It has the robust asset quality with one of the lowest net stage 3 ratio of 1% and one of the highest provision coverage ratio of 53.9% among peers as of June 25. It is the highest credit rated NBFC in India with a diverse liability franchise. It has one of the lowest cost of funds among peers. Finally, I would add that it has a strong track record of 18 years of profitability, delivering growth at scale across economic cycles. Let me now introduce you to the Tata Capital leadership team. Mr. Saurabh Agrawal, the Group CFO of Tata Sons, is also the Chairman and Non-Executive Director at Tata Capital. He is an IIT Roorkee and IIM Calcutta alumnus with decades of leadership experience across Tata Group, Aditya Birla Group, and Standard Chartered Bank. Mr. Rajiv Sabharwal, he is the Managing Director and CEO of Tata Capital. He is an IIT Delhi and IIM Lucknow alumnus. He was former Executive Director at ICICI Bank and partner at True North. He has deep expertise in retail and housing finance. Mr. Rakesh Bhatia, he is a CFO. He is also Chartered Accountant and Company Secretary. He brings over 2 decades of financial leadership across Tata Capital, American Express, and other firms. Mr. Sarosh Amaria, he is the Managing Director, Tata Capital Housing Finance Limited. He is the founding team member at Tata Capital, previously MD of Tata Capital Financial Services Limited, where he led retail, SME, and commercial finance. He is known for his strategic leadership across housing finance, project lending, and affordable housing. I'd also like to welcome my colleagues from JP Morgan, Citi, IFL, and other book running lead managers to the IPO. Let me finally touch upon the issue details. The price band is rupees 310 to 326. At the top end of the price band, the IPO size is 15,512 crores, of which primary is 6,846 crores, secondary is 8,666 crores, which leads to a dilution of 11.21% post-issue. The post-money valuation is 1,38,383 crores. The anchor book bidding and closing is on October 3rd, Friday. The issue opens on October 6th, Monday, and closes on Wednesday, October 8th. As usual, the QAB portion is 50%. Retail has a reservation of 35%, and HNI has a reservation of 15%. Finally, before I invite the management team, what I would like to add is that this IPO is not just an investment opportunity. It's a chance to be a part of a company that is shaping the future of financial services in India. We look forward to your support and request all members of the press to carry forward the message that Tata Capital represents a compelling investment case for shareholder value creation built on Tata brand, trust, and governance. Thank you.
Thank you, sir. I would now like to call upon Mr. Rajiv Sabharwal, the MD and CEO of Tata Capital Limited. Sorry.
Let me just say a few words before I hand over to Rajiv. I think Tata Capital is a very important part of the Tata Group. It is one of the businesses within the financial services vertical, which has become very large. I mean, I don't know how many of you are aware. We are in general insurance, life insurance, asset management, as well as in lending, which is where Tata Capital is. And each of these businesses, we are amongst the top three, other than Tata AMC, where we have been climbing ranks for last several years. I think I'm proud to have a team that we have today from Tata Capital. I think Tata Capital was founded way back in 2007, 18 years back. And from day one, it was profitable, which talks a lot about what our brand stands for and what I think the business that has been built. And Rajiv joined us around 7 years back, someone with a massive experience in financial services. Since he cannot introduce himself, let me introduce that he served with ICICI Bank, was a director on the board of ICICI Bank long time back, and has an ample experience across multiple verticals of ICICI Bank. With him, I think we have a leadership team, which is a mix of amongst our leadership team, we have several leaders who have been with Tata Capital from day one, and there are leaders who have joined us. And I'm very proud to have a team which I genuinely believe is amongst the best in the industry. It's not a team of one person or few people. I think the top 100 people in this company are probably the best around in what they do. And that is what makes this company move forward. I think there are two or three things which are very, very critical for any business success. One is the leader himself, the team. And secondly, I think the direction of the team. If everybody is walking in the same direction, that business ought to be successful. There's just absolutely no way that business will not perform. So today we have a platform which is amongst the top three within the lending business, within the NBFC space. The market has ample opportunities to grow, and within Tata Capital, we continue to gain market share. Our growth rates are higher than what the industry growth rates are, and we continue to outperform. We have a very well-diversified business, Rajiv will share with you, across products, across geographies. And I think we are very excited in this journey. Over the last 18 years, we have funded this business out of our own capital, and we are very happy doing it because it gives us the return that we look for. And going forward, I think this IPO is happening as a result of regulatory timeline that we had, and basically we are taking it public. But we were very happy to support the growth. So with this, let me just hand over to Rajiv to talk about the business. Rajiv.
Thank you so much. And first of all, special thanks to all of you to come out here and spend time with us. We'll take you through the whole Tata Capital journey of what we've been doing and how we look at the opportunity in India. This is a slide which we covered. But starting with this slide, I think this is a place where we feel we belong to the best brand in the country. This is a brand which signifies trust. It signifies strong governance. This is something which is extremely important in the financial services industry. Whether you are borrowing money or whether you are giving money, I think trust is the most important thing which any lender or any borrower looks for. And the Tata brand signifies the same. We at Tata Capital follow the same governance standards, follow the same rigor, the same ethical practices which have come to us from the group. And what makes us very different right from the beginning is that we belong to the Tata brand. We've been in existence, the Tata Group has been in existence for over 158 years. We are recognized as the most valuable brand in the country, a brand which is built on, as I again will emphasize, on trust. I also want to mention here that in this business, getting the money at the lowest cost of funds is extremely important. And because of the brand as well as the credit rating which we enjoy, we are able to raise money at the lowest cost, and that allows us to make our offering to the customer even more attractive. We do benefit from being present in a group which has so many strong companies. We do look at opportunities from learning from them, sharing good practices, as well as looking at opportunities of lending in the ecosystem of the Tata Group companies. This is the India story. I always keep saying that, I'm so lucky, and we are so lucky that we are born in this country called India, a country which demonstrates the highest growth rate across all large economies, and where the opportunity to grow only keeps becoming better with every passing day. If you look at the credit to GDP ratio, we still are at a much lower level than a lot of other economies. So not only do we have an opportunity to grow because our GDP is growing at a faster pace, but we also have an opportunity to grow because our penetration of credit will grow in the country. And in this, NBFCs have been quite innovative, have been quite nimble on both geographical expansion as well as using digital capabilities, being innovative on creating new products, and that has led them to grow at a fairly better pace than the overall growth rate in the market. If you look at NBFCs have been growing at a rate of 17 to 18% compared to a market growth rate of about 11% or so. And that has led to the increasing market share of NBFCs in the whole credit landscape. Over the last few years, we've also benefited by the fact that the NPAs in the industry have been quite low. And with the new policies of RBI of allowing repo rate to come down and the liquidity to improve, I think the opportunity to grow has only become better. The fact that GST cut has just come about, it's a very bold initiative of the government, and I'm sure it will be very positive when we look forward to growth in the coming few quarters. This is the story of Tata Capital. As Saurabh just mentioned, we started in 2007 and have been profitable from year one of operation. I joined the group in 2018, and I should tell you the initial discussions which I had both with the Tata Sons chairman, Mr. Chandrasekaran, as well as Saurabh at that point of time. And they all centered around the big opportunity which exists in India, the strong brand which we have, and how we need to make our own financial services brand as the leading brand in the country. In those discussions, I think there were few things which came out. which resonate with what the Tata Group stands for also. I think both of them mentioned that it is very important that we are always very strong on capital adequacy. We always look at customers as the focal point of whatever we do. So keeping service as the primary goal or one of the big objectives for us would be extremely important. The other thing, I think, what Mr. Chandrasekharan also mentioned was the fact that while we look at the short term, our larger objective should be to perform well in the long run. Because we want to be a company which wants to exist forever. And if you want to be a company which wants to exist forever, then you have to create a model which is extremely resilient. I've been lucky to get a lot of support from both him as well as Saurabh as we look forward to crafting the strategy and then implementing it in the future. We are rated AAA by all domestic credit rating companies. We are also rated in the international market and enjoy the best possible rating, which is the sovereign rating which the country enjoys. Over the years, we have simplified our org structure. We now have a simple structure, Tata Capital at the top, and below that, a housing finance company, which is 100% owned by us. In May of this year, we got the final approvals to bring the two lending companies in the group together, where Tata Motor Finance and Tata Capital merged together. With this, it created a new opportunity for Tata Capital in being present in a new market. For example, the commercial vehicle market is a large 10 lakh crore market with an average disbursement of about 1.5 lakh crores every year. So it opens up a new market for us, which we also intend to tap in the future. If you look at our growth rate has been amongst the best in the industry. We've been growing at a pace which is more than the industry growth rate. And the good part which we feel about what we have done is that along with our near highest growth rate, we've also ensured that our credit quality remains the best in the industry. This is how our whole asset book looks like. We are well diversified, present across 25 plus products. We are present in all segments of lending, whether it is consumer, housing, SME, as well as corporate. Retail, which is consumer and housing, along with SME, form about 88% of our total book. And this is extremely important because when you look at the India growth, and you look at even if India grows at about 6.5% to 7%, credit will grow at about 11 to 12%. And if you look at the past trends, then retail and SME is growing at a much faster rate than the overall credit rate. And that growth is more closer to about 17 to 18%. So we are present in the segment which is seeing the best possible growth rate in the industry. Within each of these segments, we are present across all products. In housing, which is the largest book for us, we are present both in prime housing as well as in affordable housing. In fact, in affordable housing, we are among the top 2 or 3 players in the industry and continue to grow very well. We are also present in loan against property. Similarly, on the consumer side, we are present in two-wheeler loans. We are present in passenger vehicles. We are present in commercial vehicle. We are present in personal loans, business loans. And in a lot of these products where we are present, we are among the top 2 or 3 players within the NBFC industry. Within the whole lending space, we are pretty granular in our book. 99% plus of our book has an average ticket size of less than 1 crore in terms of numbers. largely secured in nature. Retail unsecured forms less than 12% of our total book. And the book is largely organic in nature. 99% plus of our total lending book is organic. We know our business, and that is why we originate and do the credit and manage the book ourselves. We truly believe that in India, the right model is a phygital model for distribution. So while we have expanded our branch network and grown it over the last 3 years by 3x, we also have invested a lot in building our digital journeys. If you look at our digital investments over the last 4 to 5 years, we have invested over 2,000 crores. And the effort has gone in working with the best-in-class players, whether it's Microsoft or TCS or Fair Isaac. We work with the best players in the industry to build a platform which is robust. And we have tried to digitize all products, not only consumer, but housing also, as well as SME and corporate. We have tried to digitize all our journeys, and we've tried to follow a model where we are accessible to all our customers through our website or an app, whether they want to take a loan, whether they want to check anything with us, or they want servicing of any aspect. So like the large banks, most of our servicing happens digitally. 85% plus of our servicing works digitally for us. We clearly believe that on the digital side, it has to be a plus for us, and we have invested as a strategy in these areas to differentiate us in terms of our offering to customers. So our digital spans the whole spectrum, right from originating the loan to underwriting, which means when we make our decisions to give out credit, or for servicing customers, or for collecting monies. If you notice some of the numbers which are here, over 97% of our customers are onboarded using digital platforms. 96% plus of our disbursements happen via business rule engine or scorecards. Over 98% of our collections happen digitally, and our servicing capability in terms of all offerings cover 95% of the services. So in all of these areas, we follow a model where we want to be close to the customer using a branch, but we want to be accessible 24/7 using our digital channels. Of late, we have been also investing in the Gen AI space. We do believe that it has the potential to transform a lot of things which we are doing. And our initial experience with Gen AI is telling us that our response levels and our service levels can only become better and can come at a cheaper operating cost when we use Gen AI. And we do like this because any benefit which we get in terms of lower operating costs, we are happy to pass the benefits of this in terms of better service levels or cost to customers. If you look at the overall landscape, we do believe that as we move into the future, we will continue to invest in the area of technology so that our offerings can become more unique and better for our customers. The benefit of all of what we do in terms of building our capabilities as well as, investing in best-in-class platforms or using analytics to the core allows us to keep our growth at a high level and our credit costs at a low level. If you look at our net stage 3 or net NPA, it is as low as 0.5% before the merger, and even post-merger, it is close to about 1%. Our credit costs before merger have always been below 1%, and they stand out in the whole industry at a level which is extremely low. In terms of our approach to credit or collections, is to use data and analytics, to use technology so that we can communicate our decisions faster to the customers and do more of our activities in a digital manner. On the liabilities side, we do believe that this is extremely core to us, because if we are able to raise money at a lower rate, we are able to pass on the benefits also to the final customers. And in this area, our strategy is to keep diversifying our base of liabilities, to be present in all areas of raising liabilities, and to have a mix such that our overall cost is the lowest. And that is what we have been focusing and working and achieving the same. If you notice, we have relationship with large banks. We also are present in raising money through ECBs and in the bond market. We did our first bond issuance, US bond issuance in Jan of 2025. We raised $400 million, and we could raise those monies at one of the finest spreads in the industry for the NBFC space. So clearly, the whole strategy of having a high rating of AAA in the domestic market, BBB from S&P in the international market, being present across the whole spectrum of borrowing has helped us to create a very resilient liability base. This is our current board. Our chairman Saurabh is sitting out here. We pride ourselves in having a very well diversified board. If you notice, we have two very senior members who are ex-SBI, who've come in with a lot of wealth of experience from there. We have people who have experience on the market side or on the technology side. So we have a base, we have a board which is well diversified and are extremely valuable and engaged with us in our strategy. This is our team. I truly believe that our team is our true strength. We believe that we have one of the best management teams in the country. And more importantly, they have been together with us right from the beginning. As Saurabh mentioned, the whole objective is that we understand each other and we work together. And that is what helps us in getting where we are today. If you look at our loan book has been growing before the merger at about 28% plus over the last 3 years. Our NIM plus fee also has been growing at a CAGR of 32% plus. Our cost to income has been coming down, and I do believe that as we have invested a lot on digital and analytics, it is showing an even better trend. For example, in our housing finance company 3 years back, we had a cost to income of 40%, which has now come down to 31%. So in each of these areas, we are seeing the benefit of digital and AI play together, not only in terms of responding to customers faster, but also making us more efficient. Our credit costs have been amongst the lowest in the industry, and profits have been growing at a healthy pace. We do believe that our investments in the area of adding new products, and we continue to add new products which give us higher NIMs. For example, as I mentioned to you about affordable housing, we are also have launched secured business loans. Also on the SME side, leasing, where we are one of the largest players in the NBFC space, or in equipment finance. These are all areas which give us better margins, and as we are growing the proportion of these in the overall business, we do believe that things will only keep getting better. Our operating costs keep becoming lower and lower with investments in technology. And as mentioned to you, we are always working towards ensuring that our credit costs remain below 1%. On an overall basis, I would say these are the things which really stand out for us. One, belonging to the Tata brand. We gain a lot by belonging to the brand, and we work towards ensuring that we live up to the brand. Our book has been growing at a very healthy pace, amongst the best in the industry. It is pretty granular, which allows us to manage any risk far better and manage growth even better. We have expanded our branch network, but we have parallelly invested a lot on the digital space to build our digital capabilities. We have been the early ones to invest in Gen AI, and we are seeing the benefits as we are rolling out more and more projects using Gen AI. Our credit costs have been among the lowest in the industry. Having a low cost of fund allows us to be more competitive in the market and get more prime customers also onboarded with us. And backed with a governance structure which reflects the ethics which the group stands for, I do believe we are creating an enterprise which will be perennial in nature. As we look into the future, we will always look at expanding our product portfolio, looking at retaining customers for a longer period of time, improving our cross-sell, ensure that our asset quality remains strong, continue to invest in digital and technology so that we create it as a differentiator and we stand out among the industry. Also ensure that our cost of funds remain low because of our credit ratings. We will continue to focus on getting the best talent within the organization and retaining them also so that we create a very good organization. And we'll always work through a combination of factors to keep improving our profitability metrics. So that's what I had to cover. And thank you for being here.
Thank you so much, sir. We would now open the floor for the question answer session. We'll take the initial few questions from the audience sitting here, after which we'll move to the audience who've joined us virtually. Just again, a gentle reminder to please identify your name and media house before proceeding with the question. In the interest of time, a sincere request to everyone to kindly stick to one question at a time so that everyone gets a fair chance. And we'll come back after the first round of questioning is over.
Yeah, this is Dev Chatterjee from Business Standard. I write here. Yeah. So my question is to Saurabh. Saurabh, you talked about regulatory, nudge to list Tata Capital. So what happens to Tata Sons because the same regulatory nudge was for Tata Sons also?
Look, friends, we are all here to talk about Tata Capital. Let's restrict our discussions to that. I think this is a very important day for Tata Capital today when it's going public. It's once in a lifetime that a company of this size and scale, so in its own journey over the last 18 years, it's a very important milestone.
Yeah, but Tata Sons is a promoter, so obviously, there would be...
Yeah, but Tata Sons, I would not like to talk about Tata Sons in this forum. So I think let's restrict our discussions to Tata Capital. Thank you.
Sir, my name is Nitin Neganti. I'm from Money Times. Great company, and the prospectus is very detailed information. I have one question, sir. The company, in any company, bank or NBFC, chief risk officer is a very important person. Tata Capital, there was a gap of 8 months, I think in 2022 and 23, to appoint a designated chief risk officer. Sir, if I can get an answer on that, sir. Thank you.
Our strategy always have been in terms of people to get the best people within the organization. So if you look at any of our products, not only risk, even any of the business or credit functions, and you spend time with those people, these people come with deep experience and have seen number of business cycles. So when we had a situation where we didn't have a chief risk officer and the individual had to leave, I think our whole effort was to find the right person. Even if it takes a few months more, it is better to find the right person who will stand for the right experience which that person brings in and will remain with us for a long period of time. So we don't feel a few months here or there is more important. More important is to get the right person in the right job. And that will be our strategy.
Sir,
Good afternoon, sir. Thanks, team Tata Capital, for detailed presentation and briefing. I am Mehul Dani from FinTech Biz News. Sir, you have shown a very high level of investment in IT infra and systems. Going forward, what would be your approach for IT CapEx and OpEx? And is the technologies deployed by you are proprietary in nature or outsourced to some extent? Thanks.
So we work, first of all, we work with the best-in-class players in the industry. Whether if we are talking about cloud, we work with Microsoft. If we are talking about the core banking, we would work with TCS. If we are talking about retail, we work with Nucleus. We try working with the best players in the industry so that the platform is very stable and does not give us any pain. In terms of our investments, we will continue to invest in technology and, and now AI and Gen AI space. We believe that the absolute value of investments will keep growing, but as a percentage of income, it will keep coming down because in terms of core systems, we have already invested. There will be a lot of developments which will happen, but on an overall basis, absolute may go up, but as a percentage of income, it will keep coming down so that we see the benefits of technology playing on our cost to income.
Sir, Sangeeta here from Economic Times. Two things. Do you have aspiration for a banking license? And the second thing is, why is the mutual fund business and the insurance business kept outside of Tata Capital? It's not, Tata Capital doesn't have stake in either of the two business. Thank you.
Look, I think as far as each of the different businesses are concerned, they have their own trajectory as well as their own business segments. There is very little to, if these businesses are combined in a company, in the same company, then the questions get raised. Why do we have one large holding company which is holding everything else? So as a strategy, we have kept each of these businesses separate with a separate management teams and a separate focus. And that has resulted in actually the growth rates that we have seen across each of the businesses. And all of them have performed very well with the focus from the board as well as from the focus from the management teams on a very specific area. Each of them has performed well.
The first question, do you have aspirations for banking license?
I think that's something basically is premature to answer. It's we are not allowed to own a bank in any way. So that question doesn't arise. That question comes up only as and when the corporate houses are allowed to own a bank.
Hi, sir. This is Subrata from Business Standard. Just wanted to get a sense on the deadline to list, because I think September was the RBI's deadline, but you'll miss that. So how much extension have you got from RBI?
So actually, we've always been in constant dialogue with RBI. In fact, if we are present out here, we've announced the date when the IPO will open. I don't think so 6 days here or 7 days there makes a difference. We are almost there in terms of our deadline. And the other thing is regulators always look at the intent and it is not a question of week here or there. I think we are there at almost similar timelines.
Well, let me add to that. In addition to that, frankly, I think we, as you all are aware, we merged Tata Motor Finance with Tata Capital, which actually happened on 31st March this year when the approvals came through. So since then, basically, the company has been working to get this IPO done. And we do have, RBI is very much aware of the timelines under which we have been working and are fully abreast of that. Thank you.
Good afternoon, Gitanjali Kedia from SP Tulsi and Investment Advisors. Why is the AUM growth slowed down in Q1? You were almost doing a 34-40% growth rate year on year, and it's come down to almost 17% and also lower than some of the larger peers which were listed. Secondly, is all the provisioning for Tata Motors Finance complete in Q1, or is there more stress left, which is bring down the net NPAs for the company?
See, if you look at Q1, as Saurabh just mentioned, we got the approvals of all final approvals for merger in almost Q1 of this year. Our initial focus when we got all approvals is to have the perfect merger, how we ensure that all teams are aligned, how the systems are aligned, all practices become similar. So that is what we were focusing on. In terms of the book which came from Tata Motor Finance, we didn't focus on growth there, but it was more on how do we get the two entities together, and that is what we have been doing. If you take out that business of Tata Motor Finance and you look at only the erstwhile Tata Capital and look at the growth in Q1, that's about 23%, which I presume is pretty healthy from always. As we assimilate the whole teams together, I think we will start seeing growth on both fronts.
And on the provisionings, please.
Okay. As far as provisioning is concerned, as you know, while we got the approvals now, the merger dates back to 1st April 2024, and on 31st March 25, we had brought the provisioning norms of Tata Motor Finance similar to Tata Capital. So we had taken the necessary provisions which were required to be taken so that the two companies follow exactly similar norms. When we move ahead, I think we don't expect anything different than what would happen in a commercial vehicle market. So it will depend on how the market behaves, and our performance or our provisions will be similar to that. In fact, our effort always is to be much better than the market.
Yeah, to answer your question specifically, all provisions for existing book are very much in place. Thank you.
No, nothing more can be expected from Q2 onwards.
Nothing more on existing book can be expected from Q2 onwards.
Thank you.
Nothing.
Hi, this is Mayur Shetty here from the Times of India. I had a couple of questions. One was on valuation. At the upper end, the valuation is around 1.38 lakh crore. And according to the offer document, it's the third largest diversified NBFC. So how do you benchmark the valuation with the others? And the second was on the housing subsidiary. Given the current growth rate, when do you see it becoming an upper layer company?
Jaishankar, you want to take the first question?
Yeah. So I'll take up the question on valuation. Of course, among the largest diversified NBFCs, which are the ones you have Bajaj, you have Chola, and of course HDB. As is customary, we had taken extensive roadshows led by Mr. Rajiv Sabharwal. We met a breadth of both DIs and FIs, and the response from the mutual funds, the insurance companies, the pension funds, as also the FPI investors have been phenomenally good. You'll get to know about who these anchor investors are on the third. So until then, we can't really share with you. But the book really built even at a price higher than where we have come out as a band of 310 to 326. And it's keeping in line with the Tata ethos. I mean, that's something maybe Saurabh may want to really comment. The board took the decision on the pricing.
No, on pricing, finally, at the end of the day, IPO is an opportunity for a company to maximize the retail shareholder base. And Tata Group, each and every company, if you look at it, we do have a very wide shareholder base, and we do have people and families who have been with us for generations. So since Tata Capital is again a large company, is going to be an important company of the overall group, we felt it is very important that when we are raising capital for the first time, we maximize the amount of shareholders and give them opportunity to come on board on Tata Capital. Every subsequent fundraising, as and when it takes place in a financial services business or in any other business nowadays, actually happens more with qualified institutional investors. So to that extent, this is an opportunity for us to really get as many investors as would like to come into the company on board. So the whole idea is to basically make sure the price is attractive enough for everyone to partner with us in this journey. On the other question, I will ask Rajiv to answer that on housing.
Mayur, you know the answer. This is not our decision. This is the decision of the regulator. And we will decide our strategy based on what the regulator decides.
Thank you.
This is Gopika from Reuters. Just to add to Mayur's question, what would be the strategy for the housing finance company going forward? Would you look at listing perhaps in future? And secondly, if you see the net worth has increased over the last 2 years, but the profit has not kept in line. Is there a reason for this?
In fact, if you look at the housing finance company, Gopika, it actually is the best performing company of a similar scale. It returns ROAs of over 2.5% and ROEs of over 19%. So clearly, in terms of performance, it stands out. As far as what we infuse into Tata Capital Housing is a function of what we look at their possible growth rates and their business plans. So based on their business plans and growth rates, we would decide how much capital from Tata Capital will move into Tata Capital Housing Finance is concerned. As far as your other question, I think at the moment it is very difficult to decide. We will wait for whatever the regulator's decision is, and at that stage we will look at what is best for Tata Capital, and I think the board of Tata Capital will decide how we want to take it forward along with the board of Tata Capital Housing Finance.
Well, at the end of the day, I think we have multiple stakeholders, and new shareholders coming in are going to be important stakeholders in the company as well. I think any decision taken, there would be multiple options as and when that opportunity arises or that RBI requires us to puts that in upper layer. I think that's a decision that we will address at the stage. For now, I think housing business has a long runway. Currently, it's a 70,000 crore book growing at 30-35% between 28 to 32%. And I think in next 18 months, it'll cross probably 1 lakh crore. I think that's the direction it's headed in. And our belief is that it has a long runway. I think housing is a sector which needs a significant amount of financing. And we are happy that we are playing a role in that sector.
On the question of net worth, the net worth, why the net worth the profit has not.
Am I audible?
Yeah.
Yeah. So the net worth has kept in pace along with the profit. As Saurabh and Rajiv mentioned, we had taken losses for the motor finance business, the details of which have been given in the DRHP. If you look at that and adjust for that, you will get the reconciliation between the net worth and the profit growths.
Sir, excuse me. We'll have the next question from Ritu from CNBC, please.
Am I audible? Hi, Mr. Sabharwal. Ritu from CNBC. Since you're talking about shareholding, a quick question on, while unlike private banks, there's no promoter cap of 26% for NBFCs. But over the long term, would the Tata Group look at reducing the shareholding, given RBI's overall view on diversified ownership over concentration of power?
Look, right now the regulatory requirement is we have to list 25% over a defined period of time. And the way the business of Tata Capital is, I think the capital is a raw material. And if the growth rate continues to exceed the return on equity, I think if we continue to grow at rates which are higher than our return on equity, every few years we will need to infuse capital. And that infusion of capital, I think that's the prerogative of the board in what form and what shape it takes place, whether it's by dilution of equity to public markets or it is to qualified institutional buyers or through a rights issue. I think that's a decision that the board of Tata Capital will take at an appropriate time. But needless to say, every few years there would be a need for capital infusion into Tata Capital.
But there is no specific stake, some number you have in mind over a long term where Tata Group would like to see its shareholding or a cap that you have in mind?
Not at all. I think we don't have any number in mind. We have been very happy owning all of Tata Capital and putting in capital, as much capital as was required to fund the growth. I think here this is an opportunity for us to get many more shareholders and stakeholders along with us. And I think we welcome this opportunity, but we have been quite happy funding this business so far.
Mr. Sabharwal, the ROA for the company has been quite depressed when you compare to some of your peers. Is there a roadmap, where you see that improving meaningfully?
So, first of all, I think what I would like to highlight is that the whole ROA trajectory was going perfect. I think there is, some amount of impact which has come in because of the merger. Because it has just happened now, you will start seeing improving trends as things, change. For example, for us, we are looking at three big things for us in the future. One is the whole fact that as we are growing in some businesses which are high margin businesses, like we referred earlier to affordable housing, we are already among the top players in that business. Similarly, we've added, as I mentioned in my presentation, a lot of high yield businesses, which will give us higher margins in the future. The cost of funds are coming down. That also helps us in improving spreads. The other is we are seeing significant advantage now happening because of operating leverage playing out on account of the investments which we have made in technology and Gen AI. As I mentioned to you earlier, cost to income is dramatically coming down, and so is cost to average assets. And the third thing is we've always been a company which has had a sub 1% credit cost. So if you put all of this together, then I think the roadmap which we have for the future would be a very healthy ROA.
Let me add to that. I mean, if you look at the chart on the financials, which was presented earlier, that clearly highlighted 23, 24, we had ROEs which are north of 15%, and I think they were only growing if you look at the history of the company. In 25, the capital was infused pretty much towards the end of 25 within Tata Capital. And that the time at which the capital comes in, that plays a role in terms of what the actual arithmetic looks like. So adjusted for that, the company continues to deliver fantastic returns overall. I think we've been quite happy with it. And it is a huge amount of investments have been made in the business, both in terms of opening huge number of branches. The branch network has grown multiple times. And what we have seen is a massive investment in the digital infrastructure, which Rajiv talked about. And on top of that, we have had a new segment of commercial vehicles, which has come in, commercial vehicle, private vehicle, the vehicle segment. And I think these are the levers where we believe will give us a significant leverage going forward, operating leverage, to really scale up and keep improving our business as we keep moving along. Thank you.
Hi, sir. Good afternoon. I'm Khushbu Tiwari from Business Standard. While you have already answered the question on the pricing part, and you mentioned that you want to maximize the shareholders, but Tata Capital being such a name, it was already highly traded in the unlisted market also. And we have seen the pricing here. And do you think those shareholders, which is a significant number of them, who traded in the unlisted market or who bought them in the unlisted market before this, because the pricing is at a steep lower than what it was being traded at. Any comments for those shareholders, because they're also part of the whole your ownership, they'll also be part of it.
So many of these transactions that you're referring to happened quite some time back, and obviously at that point in time, it happens in unlisted markets where I don't think there is any interaction with the company. So often there can be a correlation or not a correlation with those transactions.
Thank you, sir.
Thank you. We'll just quickly shift to a couple of questions that we received from the panelists who've joined us, audience joined us online. The first question would be, how are you differentiating yourself in tech and digital capabilities? If you could reiterate that once, please.
Our approach on tech and digital is to do things, one, which will benefit the customer in terms of making our products and services more accessible to them, or in terms of making decisions which are much faster. So these are the two areas which we focus on the origination side. On the servicing side, the whole idea is that one, all of customer servicing should be happening as much as possible through digital channels. And two, even if we have to collect money, rather than being on a face-to-face basis, can we collect these monies digitally? That is where we focus on. And now with the coming in of Gen AI, I think the way it is helping us in a big way is one, making our model agnostic to volumes, meaning that we will not need to add more people as we add more volumes. You know, that manpower intensity will go down. And the second is the benefit accruing in terms of cost to income. And as those benefits of cost to income also accrue, our abilities to serve customers at a better pricing becomes even better.
Thank you so much, sir. So the next question, which I'll be reading out, considering it's been a rather challenging environment for NBFCs since May, with some peers withdrawing the listing plans and some pressing the pause button, how was the experience interacting with investors during your roadshows? And secondly, as one of the largest NBFCs in the country, how do you see the macro lending ecosystem evolve?
So let me first, answer the macro question. I think it's a great opportunity what we are seeing today. Everything is falling in place. For example, in terms of our growth rate, it is among large economies one of the best there. Now, with GST rates coming down, we genuinely believe that the future is going to be even brighter. The third is the whole digital ecosystem, which has grown in the country, has made accessibility of credit and financial inclusion far more easier. Another important thing is availability of money and availability at lower price. All of this has giving an opportunity for credit to grow at a faster pace. I think we being present in all segments of lending places us well in this whole landscape. You had one more question on the first one.
So the first part was
experience while talking to investors. I think we've got an amazing response from investors. There are more and more people who want to be part of the Tata Capital story. There are more people and many who see this opportunity for a Tata brand to be a leader in financial space only brighter.
Thank you so much, sir.
You want to add, Rahul or Yashinkar? It's okay. Okay.
I can just add, I think, just to kind of repeat what Saurabh said and what Rajiv said, the overwhelming response that we've got so far is fantastic. And this is just a testimony to the Tata Group brand name and, of course, the fantastic company that the team has built. So we are very excited as book running lead managers here to have been associated with this transaction. And the response has been outstanding.
Thank you, sir. Do we have a couple of last questions from the audience here? And then I've got one, two more from online, and we'll then proceed to close.
Hello, hi. This is Anshul from Informis Media. I just wanted to ask, the fresh issue looks like it will be 6.5 to 7,000 crores. How much of it will you lend in FY26? There are only 2 quarters left. And how much are you thinking of lending this year and next year?
Actually, the money which we raise supports us in increasing the tier 1 capital. And based on the tier 1 capital, we are able to leverage more and then lend more. So the right way to look at is how much will we lend based on the capital raised and the leverage which we raise on it, rather than only looking at the capital raised. I think this capital raise will support our growth over the next 2.5 years. And this will happen through a combination of capital plus the leverage which we'll take on the same.
So E plus the returns you make.
Plus the returns.
So even in this, I think you will be targeting 15% for tier 1 capital raise, adequacy ratio.
The capital adequacy ratio post the raise of money will be more closer to about 22%.
Sorry. Just one more. What do you think about the mix and on the source of funding? How do you expect this to change considering regulator is thinking about deepening that bond market? You feel that 36% mix will change going forward? And if you can tell us Kay, how that mix has changed over the years?
So we've been active in all sources of money. Our effort is to be completely diversified, but choose the mix such that our cost of funds is among the lowest. In terms of raising money from the bond market and the bank, I think we decide the optimal mix depending on both the tenor of funding as well as the cost of money. So if you look at the overall proportion, I think overall proportion may move a few percentage points here or there. Sometimes this may increase, sometimes the other may increase, but broadly they will remain in the plus minus 2 or 3% range.
Thank you. A gentle request, please stick to only one question. We've got a couple of more questions to take, so we want to be fair to everyone, please. The next question.
Good afternoon, management. This is Shrishti Sharma from the BFSI vertical of Economic Times. Mr. Sabharwal, you just spoke about your return on assets and how you want higher margin businesses to be done. I want to understand, will the loan mix change post-listing? 12.5% is your corporate. How do you look at it? Are you going to, escalate on that front? How is the strategy on the loan mix, particularly after listing?
If you look at our current loan mix, retail and SME form about 88-89%. And within retail, it is equally split between housing and consumer assets. As we look into the future, these proportions will remain more or less the same. You may have a percentage point going here or down, or up or down, really depending on how that segment is doing. But we are pretty happy with the ratio of retail and SME being close to about 88 to 90%.
Thank you so much.
Nestle Staney from Financial Express. HTB shares today went down from the IPO price band range. How do you think retail investors should look at the price volatility of post IPOs?
See, first of all, as I said, as is customary, we did very extensive road shows, meeting all institutional investors, probably 150 or 200 of them. We have built a pretty strong book across mutual funds, insurance companies, pension funds, as well as FPI investors. You will get to know the anchor investors on October 3rd. We are not permitted to kind of at this moment really share, but you will get to see the breadth of investors. As I said, the book was built at a price even higher than 326, keeping in mind the ethos, as Saurabh mentioned, of really leaving some value on the table additionally for retail investors and to make this very, very attractive, because there have been generations of investors who have benefited investing in Tata Group over decades, and that's something that the Tata Group really values. We have kept all of these factors in mind, and obviously institutional investors have looked at all the companies which are peers, including the ones that you stated, when they gave us this feedback. So everything is really considered and factored in.
Thank you so much, sir. Before we close, I'll just request the management, because there are multiple questions from the audience online about two conversations. The first one is regarding your loan book. It says that you've built a diversified loan book, and could you walk us through and reiterate the philosophy that you follow in your loan book, please?
If you look at our loan books, there are a few things which we have kept in mind. One, that we want to play in all segments of the India growth story. Two, we want to be in retail and SME, that book to form about 88 to 90% of our book. We want the credit costs to remain below 1%. And we would want to have a resilience and, I would say, strong presence in every product, among the top 3 or 4 players in every product, such that each product is of scale and makes money. That's been our strategy. It is possible at certain points of time that some segment may not do well, we have an ability to pull back there and, hasten our speed or pace of growth in any other product so that we maintain our overall growth rate. So, we are a unique company which has multiple engines of growth, and that is something which helps us in managing risk as well as growth far better.
Thank you so much. And the last question is, you've been maintaining one of the lowest credit costs pre-merger. What do you think is your secret sauce for Tata Capital as far as credit quality and credit costs are concerned?
I think a number of things goes into that, but the most important thing is the belief in the team that we are in the business of risk management. And as we believe that we are in the business of risk management, each leader within the organization knows that it has to grow responsibly in terms of being there in that product and also ensuring that the credit costs remains low. To support the team in making this happen, we have laid down strong risk policies, invested a lot in analytics and digital capabilities so that the information is available to us very, very quick in case anything is happening wrong in the economy. And we do engage with the ecosystem significantly. For example, with all credit bureaus, with all competitors, we watch what is happening in the market. And based on the learnings, we, I would say, are the quickest in terms of responding to any challenges.
Thank you so much, sir. With that, I would like to close the Q&A session for today. If there are any additional questions, a small request to take it offline during the lunch break, please. I would now like to invite Mr. Rahul Saraf from Citigroup Global Markets India Private Limited to give the vote of thanks, please. Thank you, sir.
Well, ladies and gentlemen, once again, thank you on behalf of Tata Capital and the entire syndicate. I extend my deepest gratitude to each one of you to join us today and for your continued support as we embark on this important journey. First, a special word of thanks to Saurabh for his thoughtful opening remarks and comments, and to Rajiv for his very insightful presentation, which helped set the right context for today's discussions. I would also like to thank all of you for your active participations. Your engagement and interest play a vital role in building the confidence and momentum to this IPO. Allow me to briefly recap the key contours of the issue. The price band has been set at 310 rupees to 326 rupees for equity share of face value of rupees 10 each. At the upper end of the band, the IPO will comprise of a fresh issue of 6,846 crores and an offers for sale of 8,666 crores, aggregating to 15,512 crores. The IPO is scheduled to open on October 6th and close on October 8th, and the anchor investor portion will be scheduled for October 3rd. Well, friends, this IPO is not just a fundraising exercise. It is a milestone in Tata Capital's growth journey and a reaffirmation of the confidence that market places on Tata Group's vision and values. On behalf of Citi and our fellow book running lead managers, I would like to thank Tata Capital and Tata Group for their trust, and we look forward to partnering with them in building an enduring value for all the shareholders. Once again, thank you very much.
From overnight global cues to live Dalal Street moves, we decode what matters for your money today. From stocks to sectors to the top business news, we've got your